Amazon and Meta both exceeded analyst expectations in their fourth quarter results, with Meta announcing its first ever dividend. Apple, despite beating expectations, facing some challenges, notably a decline in China sales. Joining us right now is Dan Flax, Neuberger Berman, senior research analyst. And give Mark Zuckerberg some credit this morning, Dan, because those were some kind of blowout numbers.
Good morning, Andrew. The numbers were strong, and the company's demonstrating that they're able to successfully pivot to newer areas. So, for example, short-form video with Reels, business messaging. They've done a very good job reducing costs in the core business. And of course, instituting the dividend and continuing to buy back stock was positive. And so when we look out over the next year, we're looking for further signs that the company is able to embrace AI, really transform the user experience, and on the other side, create additional value for advertisers.
So given the run that this stock, though, has been on, do you still like it? And where do you think it goes?
We continue to own the name. I think it can move quite a bit higher over the next year, assuming that revenue growth stays strong. For new money at current levels, we prefer Alphabet or Google, where we think the search business remains durable. You're seeing acceleration in YouTube, and we think their cloud business with enterprise customers remains underappreciated. The key with these companies is really that they're able to reinvent themselves, continue to invest for the future and play offense, while at the same time manage expenses in this tough environment.
You know, we had an analyst on just in the last hour who was making the point that there was a mojo on the call with Zuckerberg on a relative basis to the mojo, if you will, from Google or Alphabet. Do you feel that way?
I think Mark Zuckerberg did a good job laying out his technology vision in terms of what they're doing with artificial intelligence. In addition to that, he struck, I think, a balanced tone with regard to investment coming off their year of efficiency. So relative to Google, which I think is executing well, Facebook or Meta gave a little bit more color on the outlook and perspective, which the market valued in addition to their strong numbers, whereas there is certainly a bit of wait and see with Alphabet.
Okay, let's talk Apple. We were just wearing the Vision Pro right here on the set. What did you make of those numbers? What do you make of some of the challenges in China right now?
The numbers were decent overall, and I think the iPhone franchise is healthy. The install base growth, Andrew, is what's key to the story, because even as replacement rates lengthen for the iPhone business, you're continuing to see customers mix higher. They want the very best product, the Pro and the Pro Max, because of the camera, amongst other features. I think China is going to remain a near-term challenge for the company. They are the #1 vendor for smartphones in China, so I think they're executing well, but it's going to remain difficult in the near term. Services remains healthy, and I think we'll see better growth for the overall company later this year and into 2025.
Yes or no? You want to own the stock?
Yes, I want to own Apple here.